You know what nobody's talking about right now? The fact that silver demand just hit levels we haven't seen in decades, and most people have no idea what's coming next. While everyone's been focused on gold-breaking records, silver's been quietly setting up for something that could change everything for anyone holding physical metals or thinking about protecting their wealth. Let me show you what's really happening here, because the data that just came out is absolutely stunning. The Silver Institute released their latest numbers, and industrial demand for silver jumped 9% year over year. But here's what makes this different from every other commodity story you're hearing. This isn't speculation driving prices. This is actual physical consumption that cannot be replaced. Think about what that means for a second. We're not talking about investors buying paper contracts or ETFs that might get sold off when sentiment changes. We're talking about silver being permanently removed from the market, melted down, and turned into solar panels, electric vehicles, and electronics that will never return that silver to circulation. Once it's in a solar panel on someone's roof, that silver is gone for 25 years minimum. And the numbers are staggering. Solar panel production alone consumed 173 million ounces of silver last year. To put that in perspective, total global silver mine production was only 830 million ounces. So, solar panels are eating up more than 20% of all the silver being pulled out of the ground. And that percentage is growing every single quarter. But here's where this gets really interesting. China just announced they're doubling their solar capacity targets for 2025, not increasing by 10% or 20%, doubling. That means they're going to need an additional 80 to 90 million ounces of silver just for solar panels, on top of what they're already consuming. Where's that silver going to come from? The mining companies can't just flip a switch and produce more. It takes 7 to 10 years to bring a new silver mine online, and most silver isn't even mined as a primary product. About 70% of silver production comes as a byproduct of copper, lead, and zinc mining. So when copper prices drop and those mines slow down, silver production drops too, regardless of what silver prices are doing. Let me tell you a story that perfectly illustrates what's happening right now. Back in 2008, there was a small electronics manufacturer in Germany that used silver in their circuit boards. Nothing fancy, just standard industrial use. When the financial crisis hit and silver prices spiked, they tried to find substitutes, spent millions on research and development, tested copper alternatives, tried different alloys, brought in engineers from 3 different countries. You know what they discovered? For high reliability applications, there is no substitute for silver. The conductivity, the reliability, the performance characteristics, nothing else comes close. They ended up going back to silver and just eating the higher costs, because the alternative was producing inferior products that would fail in the field. And that's the story playing out across thousands of industries right now. The electric vehicle revolution is making this even more intense. Every EV uses about twice as much silver as a traditional car. We're talking 25 to 50 grams per vehicle for all the electrical contacts, switches, and circuit boards. Tesla alone is planning to produce 2 million vehicles this year. That's 50 to 100 million grams of silver, or roughly 1.6 to 3.2 million ounces, just for one manufacturer. Now multiply that across every automaker pivoting to electric. Ford, GM, Volkswagen, Toyota. They're all ramping up EV production. The International Energy Agency estimates we'll hit 14 million EV sales globally this year. Even at the conservative estimate of 25 grams per vehicle, that's 11 million ounces of silver. And that number is projected to triple by 2030. But wait, there's more. And this is where it gets absolutely wild. The defense industry is becoming a massive silver consumer that nobody's really tracking. Modern military systems, radar equipment, missile guidance systems, they're all loaded with silver. A single Tomahawk missile uses about 500 ounces of silver in its electronics and guidance systems. The Pentagon just announced a major modernization program. They're upgrading everything from fighter jets to naval vessels to ground-based systems. We're talking about a multi-year program that's going to consume silver at rates we've never seen before. And here's the kicker. Defense demand is completely price insensitive. When national security is on the line, they pay whatever it costs. Now let's talk about what's happening on the supply side, because this is where the story gets really concerning. Global silver mine production has been essentially flat for the last 5 years. We're stuck at around 830 million ounces per year, and there's no major new production coming online. In fact, several major mines are actually depleting. The Cannington mine in Australia, which used to be the world's largest silver producer, has seen production drop by more than 50% over the last decade as the ore grades decline. The Fresnillo mine in Mexico, another major producer, is facing similar challenges. These aren't temporary issues that can be fixed with more investment. These are geological realities. And here's something that should terrify anyone paying attention. Above-ground silver inventories are at their lowest levels in decades. The COMEX warehouses, where most of the trading happens, have seen their registered silver, the stuff actually available for delivery, drop to just 40 million ounces. That sounds like a lot until you realize that's less than 3 weeks of global industrial demand. Let me paint you a picture of what happened in 2011, because we're seeing some eerie parallels right now. Silver was trading around $30 an ounce in early 2011. Industrial demand was strong, investment demand was picking up, and inventories were tight. Then something interesting happened. A few large investors started taking physical delivery from the COMEX. The exchange had to scramble to find physical silver to deliver. Premiums on physical silver coins and bars started spiking. The spread between paper silver prices and physical silver prices widened to unprecedented levels. And then, in just a few months, silver went from $30 to $49 an ounce. A 63% gain in less than 4 months. Now, I'm not saying we're going to see that exact scenario play out again, but look at the setup. Industrial demand is actually stronger now than it was in 2011. Inventories are tighter, and we've got this massive new source of demand from the green energy transition that didn't exist back then. The solar industry alone is projected to consume 250 million ounces of silver annually by 2027. That's up from 173 million ounces last year. Where's that additional 77 million ounces going to come from? Mine production isn't increasing. Recycling can only provide so much. The math simply doesn't work unless prices rise significantly to either ration demand or incentivize new supply. And here's where this connects to your personal situation, whether you're thinking about retirement security or just trying to protect your purchasing power. Silver has historically been the poor man's gold, the accessible precious metal that regular people could afford to accumulate. But that relationship is changing. The gold-to-silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, is currently sitting around 84 to 1. Historically, that ratio has averaged closer to 60 to 1. In times of industrial demand surges, it's dropped as low as 30 to 1. If we just revert to the historical average, silver would need to rise 40% relative to gold. If industrial demand really takes off and we see that ratio compress further, we could be looking at much larger moves. Now, quick aside here, because this is relevant if you're thinking about the bigger picture of wealth protection. If you're sitting on $100,000 or more in retirement accounts, I put together a free guide on how gold IRAs work. It's in the description below. Covers how to get physical gold into your retirement account without tax penalties, the custodian requirements, all that stuff. Worth checking out if that's relevant to your situation, especially given what we're seeing in the precious metals markets right now. Anyway, back to where this silver situation is headed, because there are some really important implications we need to talk about. The Chinese government has been quietly accumulating silver for years. They don't publish official numbers like they do for gold, but industry sources estimate they've been buying 50 to 100 million ounces annually. Why would they do that? Simple. They're the world's largest solar panel manufacturer, the largest EV producer, and they're building out 5G infrastructure that requires massive amounts of silver. They're securing supply for their industrial base, and when China starts hoarding a commodity, you know something big is coming. India is another massive factor that most people overlook. Indian silver imports hit record levels last year, driven by both industrial demand and cultural demand for jewelry and religious items. The Indian wedding season alone consumes tens of millions of ounces of silver every year. And with India's middle class growing rapidly, that demand is only going to increase. But here's what really keeps me up at night. The paper silver market is enormous compared to the physical market. There are estimates that for every ounce of physical silver, there are 100 to 250 ounces of paper silver being traded in the form of futures contracts, options, and ETFs. That's fine as long as everyone's happy trading paper. But what happens when industrial users start demanding physical delivery? We got a taste of this in 2021 during the Reddit silver squeeze. A bunch of retail investors decided to buy physical silver and silver ETFs simultaneously. Premiums on physical silver coins spiked to 50% or more over spot prices. Dealers ran out of inventory. The U.S. Mint had to ration Silver Eagle production, and that was just retail demand. Imagine what happens when major industrial users start competing for physical supply. The solar industry can't just decide to use less silver if prices spike. Those panels need to hit certain efficiency standards, and silver is critical to achieving those standards. The EV manufacturers can't just stop production because silver gets expensive. They've got factories to run, workers to pay, and customers waiting for vehicles. Defense contractors definitely aren't going to compromise on reliability to save money on silver. This creates what economists call inelastic demand. Price increases don't significantly reduce consumption. And when you combine inelastic demand with constrained supply, you get explosive price moves. We've seen this play out in other commodities. Remember what happened with palladium a few years ago? It went from $500 an ounce to over $3,000 an ounce because automotive demand for catalytic converters outstripped supply. Silver is setting up for a similar dynamic, but potentially on a much larger scale because the demand drivers are more diverse and more structural. This isn't a temporary spike in demand that will fade. The green energy transition is a multi-decade trend. The electrification of transportation is a multi-decade trend. The build-out of 5G and eventually 6G infrastructure is a multi-decade trend. And here's something that doesn't get enough attention. Silver is also a monetary metal with a 5,000-year history as money. When people lose confidence in fiat currencies, they don't just buy gold, they buy silver too. And we're seeing signs of currency concerns globally. Central banks are printing money at unprecedented rates. Government debt levels are at all-time highs. Inflation is proving more persistent than anyone expected. The smart money is already positioning for this. Look at what the big mining companies are doing. First, Majestic Silver, one of the largest primary silver producers, has been holding back production and building inventory rather than selling at current prices. Why would they do that unless they expect significantly higher prices ahead? Major investment funds are starting to accumulate physical silver too. Sprott. Physical Silver Trust, which holds actual physical silver in vaults, has seen massive inflows over the last year. These aren't retail investors buying a few coins. These are institutional investors allocating serious capital to physical silver. And then there's the geopolitical angle that nobody wants to talk about. Silver is critical for military applications, as I mentioned earlier. But it's also critical for space technology, satellite systems, and advanced computing. As tensions rise between major powers, securing strategic resources becomes a national security priority. The United States is heavily dependent on foreign sources for silver. We import about 70% of our silver consumption. Mexico is our largest supplier, but political instability there could disrupt supply chains. Peru is another major supplier, and they've had significant mining protests and political turmoil. What happens if those supply lines get disrupted? The Department of Defense has been quietly studying this issue. They've identified silver as a critical mineral for national security. There have been discussions about building strategic stockpiles, similar to the Strategic Petroleum Reserve. If the government starts competing for physical silver supply, that's going to put even more pressure on an already tight market. Now let's talk about what this means for different types of people, because the implications vary depending on your situation. If you're someone who's been stacking physical silver for years, you're probably feeling pretty good right now. Your patience is about to be rewarded. But don't get complacent. Make sure you're storing it securely and that you have a plan for eventually monetizing it when the time is right. If you're someone who's been thinking about buying silver but haven't pulled the trigger yet, you're running out of time to get in at reasonable prices. Once this industrial demand really kicks into high gear, and the supply shortage becomes obvious to everyone, premiums are going to explode. We could easily see situations where physical silver is trading 20% or 30% above spot prices, like we saw briefly in 2021. If you're a retiree or someone close to retirement, this is particularly relevant because silver offers a unique combination of industrial demand support and monetary metal characteristics. It's not just a speculation, it's a tangible asset with real-world utility that's becoming increasingly scarce. And unlike stocks or bonds, it can't be printed or created out of thin air. For younger investors, silver represents an asymmetric opportunity. The downside is relatively limited because industrial demand provides a floor under prices. But the upside is potentially enormous if we see a supply crunch combined with continued strong demand. A position in physical silver could be one of those investments you look back on in 10 years and realize it was a game changer for your wealth. But here's what you need to understand about timing. Markets can remain irrational longer than you can remain solvent, as the saying goes. Just because the fundamentals are screaming that silver should be higher doesn't mean it's going to happen tomorrow. The paper market can suppress prices for a while. Large banks can manipulate futures markets. Sentiment can remain negative even as fundamentals improve. However, And this is crucial. There comes a point where physical reality overwhelms paper games. When industrial users can't get the silver they need, when premiums on physical metal blow out, when inventories hit critically low levels, the paper market loses control. And that's when you see explosive moves. We're getting close to that point. The warning signs are all there. Inventory drawdowns, rising premiums, increasing industrial demand, flat mine production, geopolitical tensions. It's like watching a pressure cooker with the heat turned up. Eventually, something's got to give. And here's the thing that really concerns me. Most people have no idea this is happening. Silver doesn't get the media attention that gold gets. It doesn't have the same mystique. So when this situation finally breaks into mainstream consciousness, you're going to see a rush of new buyers trying to get in all at once. And that's when prices really take off. Think about what happened with GameStop or AMC during the meme stock craze. Once retail investors decided to pile into something, prices went parabolic regardless of fundamentals. Now imagine that same dynamic, but with a commodity that has genuine supply constraints and massive industrial demand. The potential for a short squeeze in silver makes those stock squeezes look tame by comparison. The short interest in silver futures is substantial. Large banks and hedge funds have been shorting silver for years, betting that prices would stay low. If they suddenly need to cover those shorts because physical demand is overwhelming supply, we could see a buying panic that drives prices to levels that seem absurd right now. I'm not making predictions about specific price targets, because that's a fool's game. But I will say this: if silver just reverts to its historical relationship with gold, we're looking at 40% to 50% upside from current levels. If industrial demand continues accelerating and we see supply disruptions, we could be looking at multiples of current prices. And if we get a monetary crisis on top of everything else, all bets are off. The key is to position yourself before this becomes obvious to everyone. Once CNBC is running daily segments about the silver shortage, once your neighbor is asking you how to buy silver, once premiums are through the roof, it's too late to get in at good prices. The opportunity is right now, while most people are still asleep at the wheel. And look, I get it. It's hard to buy something when prices have been going nowhere for years. It's hard to bet against the conventional wisdom that says silver is just an industrial metal with limited upside. It's hard to commit capital to something that might take time to play out. But that's exactly why the opportunity exists. The best investments are the ones that seem obvious in hindsight, but contrarian in the moment. Silver right now is deeply contrarian. Most investors aren't paying attention. Most financial advisors aren't recommending it. Most media coverage is negative or non-existent. And that's exactly when you want to be buying. So here's what you need to do. First, educate yourself on the silver market. Understand the supply and demand dynamics. Follow the data on industrial consumption, mine production, and inventory levels. Don't just take my word for it. Do your own research and come to your own conclusions. Second, decide how much exposure makes sense for your situation. This isn't an all-or-nothing proposition. Even a small position in physical silver can provide meaningful diversification and upside potential. Think about what percentage of your portfolio you're comfortable allocating to hard assets. Third, if you decide to buy, focus on physical metal. Coins, bars, whatever form makes sense for your budget and storage situation. Avoid paper silver products unless you really understand the counterparty risks involved. The whole point of owning silver is to have a tangible asset that exists outside the financial system. And finally, be patient. This isn't a get-rich-quick scheme. It's a strategic position based on fundamental supply and demand imbalances that are going to take time to fully play out. But when they do, the rewards could be substantial for those who position themselves early. The silver demand spike we're seeing right now isn't a temporary blip. It's the beginning of a structural shift that's going to reshape the precious metals market for years to come. The question isn't whether silver prices are going higher. The question is whether you're going to be positioned to benefit when they do.